Hello and welcome to the 2021 Virtual Awards Ceremony for the ETF Express US Awards compiled in conjunction with Bloomberg. My name is Beverly Chandler and I'm Managing Editor of ETF Express. We are here to celebrate the winners who represent the best in the US ETF industry from issuer to service provider, covering all the parts of the ETF ecosystem. Our partners in the awards, Bloomberg, provided the nominations for the top performing ETFs, and these, along with the service provider categories, have been voted on by the industry. This means that winning an ETF Express award represents a vote from your peers and a significant mark of achievement. This is the third US ETF Express Awards, and we've seen extraordinary times since we launched them with a physical award ceremony in New York in October 2019. Last year's awards, the 2020 US ETF Express Awards, were necessarily digital and also reflected a year of extraordinary volatility in the markets at the outset, followed by the restrictions and frustrations of a global lockdown. However, the ETF industry seems to have taken to this new world rather well. ETF global assets reached a record $9.73 trillion at the end of August, according to data providers ETFGI, with record year-to-date inflows this year, which have beaten the previous record set in 2017. And the types of ETFs that those assets are flowing into have changed as well. This vibrant industry has enjoyed growth in a wide range of types of ETFs, offering access to investment based on everything from thematics to active. Headlines on ETFs have focused on two areas this year: cryptocurrencies and ESG. Cryptocurrency-based products not included as yet in this US ETF lineup have raised conversation and debate rather than assets as yet, but flourished elsewhere. The US industry awaits the approval of the first crypto ETP, likely to be a Bitcoin-based product if recent comment is true. But ESG has also dominated conversations, perhaps more so in Europe, but it continues to drive investor demand in the US. And according to the annual stewardship survey from Sage Advisory Services, there is a growing commitment from ETF issuers to perform their fiduciary duties on behalf of ETF investors. And this year was the year when apparently everyone wanted to be an ETF. Mutual fund conversions to ETFs in the US have swelled those ETF asset numbers by billions of dollars as a range of firms discovered the joys of the transparency and liquidity of the ETF structure. These new ETFs are either mirroring or replacing their mutual fund cousins. And in an interview with ETF Express, Bloomberg's own Ben Morris commented that it was fascinating at the highest level to see this development of acceptance of the ETF structure against 2 or 3 years ago, when he says there was more skepticism around ETFs. Recent months have seen nothing but steady growth for this exciting industry, which democratizes investment, bringing easy and low-cost access to investment themes, whether obscure or everyday. I'm very pleased to be able to bring you now a short interview and chat with a practitioner in the US ETF industry, an investor on behalf of her clients, Marguerita Cheng, who is a certified financial planner and professional and chief executive officer of financial advisory firm Blue Ocean Global Wealth. Firstly, may I just take a few minutes to give you some guidance on how the system works? You can move from one area of the event to another using the tabs on top of your screen. Clicking live, join now, will take you to what is happening, whether it's the keynote speech, the winners being revealed, or the post-awards networking sessions. Checking the auto follow button will ensure whatever's coming next plays automatically. Throughout the event, you can engage in chat, questions, and polls in the live discussion box. You can also connect directly with other attendees by using the Attendees tab. Here you'll see everyone who's attending the event. Select any attendee to view their profile, send them a direct message, or arrange a virtual one-on-one meeting. The winners will be announced via the winners reel, which will play automatically after Bloomberg's session. Once the winners have been revealed, an hour of dedicated networking time will take place across a selection of virtual networking roundtables. You can register to join a table, or if there's space, simply click to join in the networking tab. Feel free to visit as many tables as you like. Now it is with great pleasure that I welcome our fireside speaker, Marguerita Cheng. Marguerita helps educate the public, policymakers, and media about the benefits of competent and ethical financial planning. And Marguerita is a certified financial planner professional and Chief Executive Officer and founder of financial advisory firm Blue Ocean Global Wealth, based in Maryland. Tell me a little bit about your business, Marguerita.
Well, thank you so much for having me. I'm delighted to be here. So Blue Ocean Global Wealth is a financial planning and investment advisory firm. We actually lead with planning. We've flipped the business model, if you will. We actually do not accept assets under management unless clients do planning. Why is that? Because planning allows me to think like the client. We all want to do what's in the best interest of the clients, but financial planning makes it all possible.
And how much do you use ETFs?
So I love this question. So because we lead in planning, sometimes people may hire me for their asset allocation. I may not be managing their portfolio, but I talk to every client about the different ways in which they can invest, ETFs. And so I'm having conversations with every client about ETFs. And what I love about ETFs is they really make investing accessible.
Do you find that you feel that your clients are well served by the ETF industry in the US?
So I actually love this question. I think that the ETF industry has done an amazing job with innovation. So here's what I mean by innovation. We all know that there's overwhelming client demand and interest. You can demand something but not be interested in, and you can be interested in something and not demand it, but client demand and interest for ESG, environmental, social, and governance. And I think the ETF industry has done a great job listening to the needs of the clients. We have the ability to help our clients address gender, economic, racial, climate, social justice. My hope and wish is that for financial services to really help clients understand that there's a difference between investing and speculation. And so what I love about ETFs is they allow people to start investing because it's through investing where we can build wealth.
And do you think that there's a particular age demographic that likes ESG ETFs? I mean, are you noticing that it's younger people or?
So sure. What's interesting is I know this is an area where Europe is more advanced than the United States. Before, there was the perception that if you wanted to have impact other than financial impact with your portfolio, it would be better for you to invest your money in what used to be known as sin stocks, make a lot of money, then support charitable and philanthropic causes. Well, the tables have turned. You can have your cake and do both of them. You can have a meaningful impact on society as well as have financial impact. So that interest is driven by younger investors, but actually women of all ages are very interested in that because I want to be clear, it's not that men aren't interested, but women are more intentional with their wealth. And here in America, we have a lot of double inheritors. They're inheriting money from their spouse as well as their parents, and then they have their own wealth. It may take them longer to make a decision, and that's not because they're indecisive. It's because they want to think about the impact. They want their gifts and charitable support to be ongoing. They also want to help their families, so they are more intentional.
And do you find other types of newer ETFs, perhaps the semi-transparent model or the converted, this great push converting mutual funds into ETFs. Are you finding there's interest in those from your clients?
That's definitely interesting. I would say one of the challenges with innovation is some of these. So if we use blockchain or Bitcoin as an example, in the United States, we don't really have, I mean, I know that there may be one, or we have ETFs that are investing in fintech, and that those fintech companies are powered by blockchain technology, but we don't really have an outright, or maybe there's one that's about to launch cryptocurrency ETF because of regulation. I think that there is interest in being able to access cryptocurrency, as the next frontier. But I think what's very important for everybody, whether that's for all the asset managers, ETFs, as well as mutual funds, separately managed accounts, is to make sure that we're really focusing on strategies to build wealth. There's savings, there's investing, and there's speculation. You wouldn't put all of your money in any one asset class. So it's definitely exciting times. Investing can be overwhelming, because there's news everywhere. You're thinking about the next exciting product.
And it's interesting that you brought up crypto. So crypto and ESG have definitely dominated my year. And as you say, there is no crypto product in the US. Really hoping it isn't launched in the next day or so, and suddenly we look rather foolish for not knowing that. It's certainly going to be a big success when it comes, I think. Are there any other trends you think might be going to come down the line for ETFs going forward?
Well, we definitely spoke about ESG. I think everyone people understand the E, but now people are talking a lot about the S and the G. And even for corporations, America, we have 50 states. We also have, US territories, and each state is different. And some states, may have different ways of handling health insurance and so forth. And certain companies are definitely taking the time to speak up and out, whether that's good or bad. And that is actually under the G for governance. So as an example, some CEOs have said, if you feel disturbed by what is happening in your state about healthcare for women, our company will help you and your family relocate. That is kind of under I understand that's S for social, but it's actually G for governance, in the sense that the CEO said, I know that what I'm saying is not going to resonate with everybody, but I want other corporate leaders to know it's okay to speak out and up about certain things, because it's only by doing this that we will make the world a better place. So I think we're going to see more of that.
And that's got to be a good thing. And thank you so much for your time today. I think we're going to end on that nice note, that the world needs to be a better place, and really hope ETFs can play their role in that. Marguerita, thank you so much for your conversation with me this evening. And now let me introduce you to our keynote speaker, James Siffert, ETF Research Analyst, Bloomberg Intelligence.
Hello, everyone, and welcome to the ETF Express US Awards. Before we move on to the actual awards, I'm going to talk a bit about the industry trends, things going on, and current events. So to start, before I do that, I'm going to introduce myself a little bit. My name is James Siffert. I work for Bloomberg Intelligence. What I do is I research I research the asset management industry and ETFs more specifically. As I said, my team and I write specifically about ETFs, but we cover the broader asset management industry. I dip a little bit into cryptocurrencies, and I used to cover funds, all types of funds, back in Bloomberg's global data team. So Bloomberg Intelligence is Bloomberg's sell-side research arm, where we cover many different things. We have people that cover credit. We have people that cover equity strategy, ESG, all of the above. So check us out. For a little update on the ETF industry, in the US, we currently have 2,682 ETFs with almost 6.8 trillion in assets. When you expand that globally, we get to something like 9,660 ETFs and almost 9.7 trillion in assets. So far in 2021, we've had a whopping 1,100 products launched globally, at least that we know of. And in the US, we've seen 278 launched so far in 2021. So for 9 months, that's a pretty whopping standard, and we've definitely seen a growing number of launches. Now, one thing we are watching within those launches is the preference of active ETFs. Now, whether those ETFs are being launched as fully active funds, or a lot of them are actually being launched as almost like active in name only, where they are largely rules-based indices that these ETFs are tracking, but they're technically active in that rules can be overridden. And a lot of that has to do with the new ETF rule and also just with all the broader active managers entering the space. So there's a lot of legacy active asset managers that are basically can't ignore what's going on in the ETF space, and they're launching into ETFs. As you can see, there's been a growing trend of the number of launches that are, as a percentage of launches that are active. But the big trend we're seeing now, as many of you will know, is this big active managers are taking on the new active realm. So for many years, it was smart beta ETFs that were just dominating the landscape. And as you can see in 2020, there was a massive change in the trend. We saw ESG ETFs launch. We saw the ESG ETFs take in a lot more money than they have. Thematic ETFs have done extremely well, and active ETFs have also done extremely well. And that's largely from people like Kathy Wood on the equity side, and a lot of active fixed income have also done very well. So I mentioned themes briefly, but one way that this really shows up is themes we put in our sector part of our dashboard, which is where we keep all the data for Bloomberg Intelligence ETF analysis. And when you look at it, the asset levels for all the sectors, thematics is now the largest sector as far as ETFs go. And that's partially because it's easier to tell a story about a theme than a specific sector. The economy is changing. A lot of companies cross multiple different sectors, but you can see back in 2017, there was plenty of sectors that were larger in assets, and now themes are number one. The other part of this is we're looking at how active managers are entering the space. So a lot of active managers were dipping their toes in the ETF space, and we've seen a lot of them just jump in full bore more recently, whether it's DFA with their conversions, whether it's active non-transparent launches, which ironically have been very small. I mean, we're looking at less than 1% of the assets are in active non-transparent ETFs. So this is just an area of where we're looking at and where how active ETFs have gone. Now, when we look at this, the other thing to note is that there was over 275 closures in 2020. So this white line is the number of launches on a rolling 12-month basis. So on a monthly basis, we look at the number of ETF launches going back 12 months. Blue line is closures. As you can see, we hit a really large peak at the end of 2020. Again, 275, but that has completely dropped off while launches have continued to take off. So we've seen this huge trend. Again, the ratio of launches to closures has leapt up as launches have sped up and closures have slowed over the last 12 months. And it doesn't look like that trend is abating anytime soon. Now, I've talked about launches, we can talk about flows, we can talk about assets, but one thing that's often overlooked is the amount of trading, which kind of really shows you how embedded in the financial ecosystem ETFs have become. In 2020, there was over $32 trillion worth of trading of US ETFs alone. Now, another thing I want to point out is bond ETF assets. So bond ETF assets have crossed the $1 trillion mark despite dislocations and everyone complaining about potential issues with those ETFs. Now, finally, one thing that's near and dear to my heart that's kind of taking up all the coverage of the media side of things, publicly listed crypto assets have skyrocketed. They're near $60 billion in assets right now. As everyone's talking about it, in the US, everyone's worried about when an ETF is going to launch. We personally think one is going to launch in October, but here's a quick rundown. There's at least 19 different issuers in the US that have filed for 30 different ETF applications in the crypto market. And really none of them have been approved, aside from some mutual funds and some ETFs that hold, like there's an ETF from Simplify that holds 10% in GBTC and some other products. But really this is just a mad dash to launch their first Bitcoin ETF. Now, if we zoom in on the ones that we believe have the most likelihood of getting approval, largely from Gensler's comments about what's going to happen with an ETF, that he wants things to be a 1940 Act specifically. He wants them to be futures-based. I think the futures-based gives him a little bit of a cushion because futures are regulated by CFTC. But honestly, if he's worried about manipulation, if there's manipulation in the underlying market, there's likely to be manipulation in the futures prices. But if all goes according to plan, or if the rules just kind of stay where they are, we could see ProShares launch the first Bitcoin ETF. It'll be a futures-based ETF, and it's likely going to be approved in October. in our opinion. We've been wrong plenty of times before, so we might be wrong again, but it is what it is. But we do have an issue with the way that Gensler is going about this. There is a lot of confusion with futures. The futures ETFs are subject to backwardation and contango that can confuse investors. We've seen since for the last 3 years, if you look at the comparison of like the front month rolling index of Bitcoin futures versus a spot Bitcoin ETF, it's underperformed by 76%. Now that happens mostly because the product has been in contango for a long period of time, so it's constantly having to sell low or buy high. But again, and if it goes into contango, the reverse would be true. But it's just an inefficient process that's adding layers of complexity that we really don't think need to be there, because we've seen plenty of crypto ETFs launch. So all of this data and more can be found on the dashboard in the terminal at BI ETF Go. And it's a lot of the charts that I just showed you, we share in our research on the dashboard and also in our data library. So before we move on to the awards, I'd like to just say huge congratulations to all the shortlisted candidates and winners. Thank you for your time, and good luck to everyone.
Thank you, James. And now it's my pleasure to reveal the winners of the ETF Express US Awards 2021.